Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Interesting story right through about history being on the side of stock and bond bulls as Fed officials kicked off that two-day policy meeting today. Equities and bonds have posted weekly gains amid 6 of the 8 Fed meetings over the past year. This, according to an analysis, Tim, by Citigroup.
And yet the devil always in the details, with the key points to focus on in tomorrow's Fed decision. Back with us, we have Stephen Skancke, Chief Economic Advisor at the wealth advisor Keel Point. Steve, also a former U.S. Treasury and White House National Security Council staff member, serving during the Nixon, Ford, Carter, and Reagan administration. Steve joins us from Washington, D.C. Also here in the studio, Bloomberg Economics U.S. economist Stuart Paul. Stuart, good to have you here in the studio with us. I do want to start with you because the Fed is not expected to make any move tomorrow, but we do, or a lot of investors, I should say, expect to hear signals of perhaps a move come September. How do they thread that needle where they say, okay, we're not going to do anything in July, maybe we're not going to do anything, we're not going to do anything until September. How do you do that?
There are a few different ways that they could sort of gently modify the FOMC statement, the formal statement that comes out. For example, in the opening paragraph, there's a line, in recent months, there's been modest further progress towards the committee's 2% inflation target. Just stripping out the word modest, just there's been further progress would be one of those little gentle signs.
We said the devil was in the details,
yeah, that's right.
or one word.
That's right. They could be a bit more bold and say things that if the data evolves as the committee expects, it will soon be appropriate to begin cutting rates. That would be a much bolder, clearer call for a looming rate cut in September.
All right, I want to bring in Steve, and I'm just pulling it up on the Bloomberg. So September 18th is a long way off. I think about, Steve, we've made progress, a lot of progress in the past year when it comes to inflation. It seems to be settling down consistently. We continue to see U.S. economic growth. That's a good thing. We got some data today, consumer confidence rising on an improved outlook for the economy, job openings beating forecasts. It's this delicate balance. If you were still advising the White House, what would you be telling them about tomorrow's Fed decision?
Well, that they just need to be patient and not seem anxious and not jump the gun on it. The Fed is navigating this very carefully and really very deftly. A week or so ago, the Fed chair, the New York Fed Bank president, were all talking about the concern about what was happening in labor markets and really signaling that they're eager to start cutting rates, but they really need to see good inflation numbers. And then lo and behold, they get a reprieve because we get better than disinflation numbers with the PCE deflator down at 2.5% for the last year, and then better than expected second quarter economic growth at 2.8% annualized. Even though when you dig into it, it's not quite as good as it looks, but economy is slowing, but not in the tank. Inflation is coming down, and even the hard to squeeze housing or shelter component of the CPI and PCE deflator has started to give up. But it had been trending at 6.5% to 7% inflation, and now it's at 4%.
So, Steve, would you be telling, if you were advising the White House right now, say, hey, listen, guys, go take that vacation. We got plenty of time. Just cut to the chase. Would you say that?
I certainly would say that, because anything that they could say, Carol, is not going to be helpful to the Fed doing what it really wants to do, and that is cutting rates in September. Now, they can applaud positive economic growth. They can applaud inflation coming down. But I would tell the folks in the White House to say absolutely nothing about the Fed meeting and what the Fed is doing.
They're independent, of course. Carol, remember,
Who?
the Fed. The Fed is politically independent.
I've heard.
You've heard. Stuart, economic data that you have an eye on at Bloomberg Economics as U.S. economist, where are you starting to see concerns? Do you think the Fed is acting too slowly on these concerns?
I don't. So you might want to rewind the clock a little bit and think back to Q4 of 2023 when the inflation data were so good and everybody was expecting a rate cut to come in March. And so things can change pretty quickly. We have had
It's like when you have a little sibling and you psych them and you pull something away, or like, you know, that
Right.
game.
Right.
Psych. Not happening.
Speaking from experience, Carol?
Yeah, there's a lot of siblings who do that.
The data in the economic landscape can change relatively quickly, and where we've seen the most change so far has been in the loosening of the labor market. It was just in the June summary of economic projections that the Fed is expecting to end the year with 4.1% unemployment, and we're already there. And I think that odds are favoring us triggering the SOM rule, that real-time recession indicator, in August.
Remind us what that rule is.
So if the 3-month moving average of the unemployment rate exceeds the 12-month minimum by more than 50 basis points, by half a percentage point, it's typically a good indicator that a recession has already begun, that you're in the early innings of a recession. So we're expecting, not only are we expecting to not end the year at 4.1% unemployment, which is where we are and which is where the Fed expects to end the year, we think that we're going to trigger that real-time recession indicator before the September meeting, which would warrant that cut in September.
Is there a chance it's triggered on Friday?
Very low probability that it's triggered on Friday. We'd basically need to get a move to 4.2 and a half, right? So 4.25% unemployment. So a bit out of range. Consensus is expecting a 4.1% unemployment rate. We think that it's more likely going to be the case that it's going to be triggered in the August jobs report, which comes just a few days before the September meeting.
Well, I kept thinking, we had that inverted yield curve for so long. I mean, do we get off scot-free, that we don't ultimately get a recession? I mean, Steve Skancke, if we get a recession, is it touch and go because we have enough growth, or could it be something more dramatic and problematic?
Well, the thing about it, Carol, that's a very good question, is that these things are never linear. It's not that it just sort of eases into recession. Something triggers it and pushes it, and most likely it would be mild, just given everything else that's going on in the economy. But it isn't necessarily a mild recession. And so the Fed treads very carefully, and as Stuart said, this SOM rule, it's a statistical observation. It's not a syllogistic argument as to why it happens, but it has a good enough statistical basis that we really need to be careful about that and watch for it. The other thing is, and I agree with Stuart, it's very unlikely that we would see unemployment trigger up to what would be needed to trigger the SOM rule. But the household survey has been so quirky since COVID and the shutdown of the economy that and it digresses so much from the employer survey that we could actually end up with something that pushes unemployment to 4.2 or 4.2 and a half.
Yeah.
And then we've got this phenomenon of, well, what does it mean? And of course, markets would go crazy while they try to figure that out.
Got it.
Stuart, 10 seconds. 175,000 is the number that economists are expecting with the jobs report on Friday. Does it come in above or below that?
We're a smidge above, but we see the downside risk to 175. The effects of Hurricane Beryl are likely showing up in the data. We've already seen it affect the unemployment insurance claims data just 2 weeks ago in Texas.
All right. There we go.
I said 10 seconds. He did it.
Love when people listen. Thank you so much. Steve Skancke, Chief Economic Advisor at Keel Point, and of course, our own Stuart Paul, Bloomberg Economics U.S. economist.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Vice President Kamala Harris is kicking off a push to compete against Republican Donald Trump in a wider swath of battleground states with a rally today in Atlanta. Harris's event in Georgia's largest city is her first major effort to put a larger group of states back into play since launching her campaign back on July 21st.
Meantime, the presidential race is on. The money race, that is. Among our most read on the Bloomberg terminal today is an exclusive about hedge fund billionaire Ken Griffin, who's spending tens of millions of dollars to back Republican primary candidates across the U.S. The story reported by Bloomberg News national reporter Mike Smith and Bill Allison, Bloomberg News campaign finance reporter. Mike joins us from Miami. Bill in our D.C. bureau. Mike, I do want to start with you. How would you characterize the type of candidate that Griffin is giving to right now? Because there's a lot of nuance here.
Yeah, there is a lot of nuance, and it's not entirely clear exactly what he's looking for, but in general, it's sort of old school pro-business conservative values that he is backing, for example, national defense. And one of the main things he is promoting is sort of helping the American dream, which is obviously a very broad description, but that's how he describes it.
Does that backing, Mike, include Donald Trump at this point?
Well, so far, no. As far as we can see in the most recent filings in terms of money, he's yet to give money to Donald Trump. He hasn't ever given money to Donald Trump that we know of. And he's quite guarded in saying whether he's going to back Trump or not. He's certainly a Republican. He gives to Republican causes and candidates, but Trump is yet to be seen.
So, Bill, let's go through the money. What do we know about Ken Griffin and his donations to the GOP going back the last decade or so? What has he typically supported? How much has he given up? And where does it go? And what is he doing today?
Really, since 2016, he's focused on Congress, both the Senate and the House. He's given, I think, $248 million since 2015, which is an awful lot of money, about $250 million. And he's focused largely on super PACs that, again, elect members of Congress. And in the last couple of cycles, he's really looked at early money and having an influence on primaries, like who gets chosen to get elected to Congress. Like he'll look at safe Republican districts, he'll put a lot of money in behind what he views as a superior candidate and try to get that person into Congress. And so far this cycle, he's put more than $75 million into political committees at the federal level.
Mike, how successful has he been over the last decade? Because it seems like he hasn't always bet on the right horse, so to speak. He supported the opponent to J.D. Vance in his Ohio Senate race who J.D. Vance ended up beating. He's thinking about supporting somebody who could challenge Matt Gaetz. He has supported Nikki Haley in the past, Kevin McCarthy in the past as well. How successful has he been?
Yeah, I mean, that's an elusive thing to answer, but we can say that this cycle, he's gotten behind 60 different candidates in congressional races, and they've won about 2/3 of those, or a little bit more. So it's not a bad record. He has won a lot, but he's also lost some, and a lot of his money has gone into losing races, and a lot has gone into winning races.
And I do wonder too, Bill. We often kid, but it's very true. Money talks, right? And money gets attention. How influential has he been really in kind of shaping what's going on in the Republican Party? We talk so much about it being, Donald Trump's party right now, but how much has he really been influential over the GOP overall?
Well, the Republican operatives that we talk to, the people who run super PACs, the people who recruit candidates, the people who really kind of do that nuts and bolts work of running the party, say that he's fundamental to their success. He's very influential. He's very important. If you have an idea for a super PAC, you want to elect veterans, you want to elect women with business experience. There's a whole broad range of folks who do different kinds of super PACs. He's somebody who's definitely going to be on your list to try to get, at least to his advisors, to make your pitch, to say this is what my plan is, this is what I'd like to do. And if he decides to fund you, you have a good chance of also drawing money from other donors.
Bill, somebody might read a story like this and come away with a really cynical view that, politicians can be, I'm not going to say they can be bought, but certainly people with power are able to donate a lot of money to super PACs that go around traditional campaign finance. Just give us some context as to how something like this is legal and how super PACs are able to operate in this world when certain individuals are only allowed to give a relatively small amount of money to individual candidates.
Boy, there's a famous saying in politics that there are three important things in politics: money, and I forget what the other two are. And this has been kind of consistent throughout history. Super PACs are legal because of basically the First Amendment. The Supreme Court held that if you're speaking independently, i.e., not donating to a politician, but donating to a group that tries to elect politicians, that's First Amendment protected activity. And that, in something called the Citizens United case, gave us these creatures, or these super PACs. And it is fairly it is fairly important in U.S. politics that you be able to have. There's three different kinds of donors. There's small dollar donors, which are very important, but you need millions and millions of them to add up to a lot of money. And then you have a handful of people. There's the folks in the middle, and you have the handful of people at the top who can, with one check, fund a huge ad buys. We've seen already in this campaign an investor named Timothy Mellon who put $50 million into a super PAC backing Donald Trump. I mean, it's we've done stories that Elon Musk is thinking of putting $45 million into a super PAC each month to help Donald Trump with his ground game. So obviously, it's hugely important, and it's perfectly legal.
Mike, I think about Ken Griffin, right? He's been in Florida, maybe a couple of years, or it's been a couple of years since he announced moving down there. He's become very influential, certainly on the state. But I do think about, as you guys are laying out the causes that are of importance to him, he doesn't necessarily buy into the populism, does he, that Donald Trump seems to espouse along with J.D. Vance?
Yeah, I think that's a good way to put it. He stresses that, and the people that are close to him stress that what he's looking for is candidates who are conservative, Republican, but also candidates that can govern, governance. He likes to use that word a lot in a lot of things that he does in terms of giving. And I think he strives, or he says he strives to apply that to the candidates and the politicians that he decides to back. And he's quite loyal. He will stick with a politician that he believes in or feels like is worth backing through wins and through losses. And that seems to be a key driver of what he does. He wants leaders in Congress, especially, who will actually get things done, who will legislate the kind of things he wants Congress to do, that he supports. And he shies away from backing candidates that are less effective in governing, as he likes to call it.
Mike, what do we know about Citadel Public Affairs head Kason Carter?
Well, he's very key to this process. He wouldn't talk to us for this story, but he plays a pivotal role in helping Ken Griffin decide where to put his money, not just in political giving, but also in philanthropy, for example. So he's a pivotal sort of advisor in that realm.
Hey, Bill, when you look at the money that's been drummed up in this race so far, I think about, Kamala Harris, the money that she's raised since she has essentially taken over the mantle from Joe Biden. I think about, we just talked about Elon Musk, we're talking about Ken Griffin. It's a lot of money. I'm just curious, is this turning out to be one of the more expensive campaigns or races?
It's like it's going to be. I mean, it's, every presidential record sort of sets a record, or presidential election sets a record because, contribution limits go up, things get more expensive, super PACs are, play a bigger role. There was some thought that maybe the 2020 election, because of COVID, there would be less spending. It turned out there was more spending than ever. So I think we'll see more spending, and it's in part because, as Ken Griffin said or told us in the article, it's there's a lot at stake in this election. It's an important time for the country, and all the money is coming out.
Bill, just 20 seconds left. Any whispers of campaign finance reform around the halls of Washington, D.C. these days?
It's, there are people who still plug away at it. It is not really a priority for Congress or this administration, and it hasn't been for years and years. I mean, the closest thing we have is some bills to disclose dark money, but, they get stuck in the Senate or the House and don't really go anywhere.
All right, well, if you weren't depressed enough, we're going to have some talk of climate change coming up in just a moment to keep the mood going. Bloomberg News national reporter Mike Smith and Bill Allison, Bloomberg News campaign finance reporter. This is a Bloomberg exclusive and among our most read on the Bloomberg terminal.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, rural students lag behind the rest of the country in college attendance, and one of the world's top bankers is spending a lot of money to address that. Byron Trott, who grew up in a small Missouri town and became one of the world's top bankers, will spend $150 million over 10 years to help more private colleges and public universities recruit rural students.
That's right, Tim. The new donation builds on a $20 million initiative his family foundation started last year with schools such as Yale, Ohio State, and the University of Chicago, his alma mater. Bloomberg News higher education finance reporter Janet Lorin writing about this in recent days. She joins us now here in our Bloomberg Interactive Broker studio. Also with us is Jim Nondorf. He's Dean of College Admissions at the University of Chicago, along with Marjie Betley, who is Deputy Director of Admissions at the University of Chicago. They both join us from that city. And Janet, I want to start with you because Byron Trott is somebody we used to talk about, I feel like, a lot, well known in the financial industry, although maybe not as of late. Tell us a bit more about him and what he's done.
Well, Byron Trott grew up in a very small town in Missouri, and it really wasn't the kind of place that got visits from admissions officers like Yale or MIT or the University of Chicago, and he became extremely successful. He went to Chicago for college and earned an MBA there and started a very long career with Goldman Sachs, where he earned the title of Warren Buffett's favorite banker. And
good title to have.
He went out and, he's been an investor and runs his own merchant bank, paired with Michael Dell's investments, and has become extremely successful, and had a conversation with Jim Nondorf asking about rural students at the University of Chicago. And that led to an effort to recruit more students there. And then it led to a bigger effort to recruit students from additional colleges, as we've mentioned, 16 schools. Mm-hmm. And now he's doubling that and putting $150 million for recruiting efforts, but also to help students in high school sort of understand what college is.
Right.
And, it's not just the college, it's just explaining them what is college, how to get there, and it's a lot of public universities as well.
All right, Jim, come on in on this. Thank you both for being with us. What did that mean? What does this money mean for you guys?
So really, and I do want to correct, Marjie, in addition to being an outstanding admissions officer for U Chicago, she is actually the executive director for STARS. So she really puts it all together and works with all of the other colleges and universities. She's much more important than me in many ways. So, but I will tell you what it means for us is, rural areas, small towns, sometimes they're easy to overlook. They're harder to get to, they're harder to engage, and quite often it will be, there won't be anybody who's ever gone to U Chicago or Yale or wherever, and so they don't have easy access to role models that are going to inspire them and say, hey, I'm welcome there. And so what these funds do is they enable all of us to both have someone on our teams. In our case, I have a Trott rural director who focuses on engaging our other admissions officers to make sure we cover small town and rural school high schools, but also that that we can do programming, bring them to our campus at U Chicago. Prior to launching STARS, Byron had supported a program called Emerging Rural Leaders, which Marjie ran, and it brought students from all around the country. And what is wonderful is those students then go back and they are a proof point to all the other students in their high schools,
right,
that they are welcome at our schools.
So tell us a little bit about the efforts. How we know how difficult it is to get to rural towns just as one person, but going with a group and sort of doing an admissions tour of Tennessee, we wrote about that last year. What does it mean to have, so many schools reaching out to so many different towns? And tell us a little bit about the efforts last fall.
Marjie, come on in on that.
Yeah, so I'll give you a framework, and then maybe Marjie will take the details. But the framework is really, sometimes it's wonderful to have multiple schools so that students get a sense of the breadth and depth of higher education, and that that there are schools who have 4% admit rates and 80% admit rates, and there's a lot of amazing places to go. It also allows us to kind of divide and conquer, where maybe we can't, as U Chicago, go see every more schools. If we divide them up amongst 32 schools, we can see 32 times more schools and represent all 32 schools just by one admissions officer visiting that school. So it's about leverage and expanding the impact that we can make individually when we do it all together. But Marjie has gone on these, she's led them, she's put them together. I'll leave it to Marjie to tell you a little more.
Yeah, I think Jim is exactly correct. We can do exponentially more as a network than we could do as one highly selective institution. The need is huge. And as one school, we can only impact a very small number of students. Whereas as a network of schools, we can impact thousands of students. It's a massive difference. So I would say any given year, the University of Chicago, even though we had rural as an initiative, we were only visiting maybe a couple dozen rural high schools during our recruitment time. Whereas this past year, as a network for STARS, we visited over 1,100 high schools. Another example that I have is that with these trips where we go to students, many times it is their first opportunity to meet with multiple admissions counselors. I have a group of students that I work with over the summer through Emerging Rural Leaders. Out of that group of 60 students, almost every time when I ask how many of you have had more than 5 colleges and universities visit your high school, only 2 hands went up this year. In one swing with a group, we can bring more admissions counselors, more different kinds of schools, more information and more options to these students in one fell swoop than they're ever going to see in an entire year. So it is exponential what we can do as a group that we couldn't do alone.
So both of you came from small towns to study at the University of Chicago. So once you've recruited students and told them about college, it's another thing to sell them to be able to go to a place like the University of Chicago or MIT or even, a large state flagship. Can you explain what you're telling them about coming to college and the big difference going to a local community college versus a 4-year college that can give them opportunities and really also help their family? Marjie, why don't you start?
Perfect. Having gone through that kind of experience of never having taken public transportation before in my life, never really needing to navigate something as large as the city of Chicago coming from a smaller town in Georgia, it was a huge transition. And there are lots of transitions that students are going to go through. It's going to be academic, social. So we want to meet them at every stage and we want to meet them where they are. I think support systems are something every single member school has focused a lot of time on this past year. Jim mentioned at the very beginning that part of these funds go towards finding a point person on each team in each of these universities. That person is a face for students to ask questions. We are there for them, not only admissions process, but we build those relationships all the way through to when they're students on our campuses. For example, I host quarterly socials for our rural and small town students on campus. I'm available for one-on-ones. I act a little bit as a social advisor to help them make some of those transitions. So we are thinking about academic, social, career, financial, all those different really important support systems. One other thing that I'll point to, the University of Chicago being a really good example of this, is that financial support. So we offer amazing financial support in general for all of our students. But when we started these efforts and working with rural students, we really pinpointed one important thing, which were family farms. That was a big barrier for students because we were counting them as assets in their financial aid applications. Well, not fair to ask a student to go sell their home family farm in order to attend college. So we took that out. We changed our financial aid policies to be more welcoming and to be more accessible for rural and small town students.
Hey, just got about 40 seconds here. I am curious, Jim, were you guys not recruiting from rural areas beforehand? And again, just got about 30, 40 seconds.
Sure. So to be very honest, it wasn't something we tracked. It's not that we didn't do it. I'm sure we visited some schools, but when Byron first approached me about this, he asked how many rural students we had in a class, and I didn't even know the answer. And it was a small number. It was about 13. And now they're 10% of our class. And you actually have to identify and make it a priority, and that's what STARS does for all of our schools. And that's what Byron's support has really, how it's radically changed the composition of our incoming class.
Well, and it certainly fits with this idea, right, that we say, there needs to be diversity of all kinds when it comes to academia, right? That's part of the experience. So really interesting stuff. Listen, Thank you both. So appreciate it. Our thanks to Jim Nondorf. He's Dean of College Admissions at the University of Chicago, and Marjie Betley, Deputy Director of Admissions at the University of Chicago, but really instrumental she is in terms of this program. And of course, Janet Lorin for bringing this story to our attention. She is our Bloomberg News Higher Education Finance Reporter. So much going on when it comes to higher education.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Oh, if people just knew how you sang to the theme song.
Can't do it. We don't have the rights to the music, so I can't sing it.
You
Maybe
do
we
it-
can.
You do it well.
Thank you.
Can't you do like
Heard it for a
3
few
seconds
years.
or something?
No, I'm not
What's the
allowed to.
rules?
No.
I don't know, something
No.
like that. What we are allowed to do, though, is talk about the markets. Bouncing around here, we're off our highs and lows of the session, down on the S&P and the NASDAQ 100. You just heard Charlie breaking it down. We are up on the Dow Jones Industrial Averages. We get ready for a big drop of earnings after the closing bell. So curious to see what Walker Williams has to say about it all. He's Chief Market Strategist of Private Wealth at the wealth advisory firm Lido Advisors. They have $20 billion in assets under management. He joins us from Vail, Colorado. How are you?
I'm doing well. How about you guys this afternoon?
Doing okay. How are you doing, Tim?
Good. I kind of wish I was in Vail, but you know I was going to say that. You know,
There's
driving
worse
on
places, Tim.
I-70.
It's okay.
Do some mountain biking.
Are people worried about, politics and climate change and geopolitics and growing U.S. debt in Vail?
More so than you think. I think, when we're looking at the worries in Vail or New York or wherever they're kind of very much similar. Politics, I would always put at the top of the list. We can change the players, but we frequently get questions about what does this implication mean for growth, especially for taxes, for structuring, for things of that nature. Talking about climate change, I think that's a uniquely interesting topic because when we discuss climate change, it's not just, the idea of, hey, what's going on with storms? We've done a lot of work on what does that mean for property and casualty insurance companies. You see this right now. There's been actually a couple deals that we've seen where insurability has been an issue that couldn't get past the finish line, especially if you're buying properties or investing in properties in certain parts of this country. Lido, we're headquartered out of California. The risk of wildfires and what that means from transactions, or simply like, hey, can I get homeowners insurance in separate areas of the state, is something you really have to dig into and consider.
So Walker, just to help us understand your role at Lido, are you focused on the Colorado area geographically, focused on the greater Denver area, Edwards, Vail, sort of that area?
No, so like my role is a national role as the chief market strategist for the firm. I do live in, as you mentioned, Vail, Colorado. So from that
That's a good place to be.
yeah,
chief market strategist.
But I do travel. Yeah.
Okay.
So so I am based here, but my role is really a national role where I spend most of my time thinking about strategies and trends that are affecting the markets in various aspects.
Fortunately, the Eagle Airport is not too far away, and you can do that. All right, so let's talk a little bit about what you're seeing when it comes to the markets, because one thing that we've been talking a lot about today, and also in recent weeks, is this idea of a rotation out of large caps, especially today with the tech mega caps under pressure. But give us an idea of sort of what you're seeing down the road as we do get further into the second half of the year.
Yes. So obviously, like we are seeing the beginning parts of a rotation that are happening in the market. If you look at the market today, even going into this summer, I think there was reasons for pausing, especially with the mega cap tech stocks driving disproportional aspects of return. We do think there are values that are going on right now in a rotational aspect back into the small cap space. We are seeing the gap between, the cap weighted index and the equal cap index come back together, which is refreshing to say the least. I do think a lot of this is dependent, though, on, this is a big week, not overstating the obvious, with central bank actions and what goes on. I do think if the Fed does change some of their verbiage and we get more certainty around a rate cut more than we have now, you are going to see the propensity for small and mid caps to really appreciate here based on their corporate earnings. We do think there's value, especially in different sectors that are so tech dominated. In the healthcare space, there's green shoots. We are seeing different sort of green shoots in various industrial companies that are being very attractive right now. But we're still looking at a market. I'm curious, from the standpoint of things do look very expensive on a high level. So any sort of rotation into different sort of value, I think is a good place to be. We are seeing our clients also reposition their portfolios into potentially benefit from that rotation down.
Well, that's what I was curious. I mean, when we talk, especially with individuals who are dealing with wealth management clients, I mean, it's long-term, long-term, long-term. I get that. But I am curious, is it plain vanilla equity fixed income, or is it a lot more alternative assets? I am curious when it comes to your clients, where you are investing a lot of their money.
Yeah, so when we define alternatives, let's just for the sake of simplicity say anything that's not a stock and a bond.
Right.
Our clientele has been alternative heavy for a long time. And our alternatives program is typically structured in a couple different facets. We have a lot of real estate, both debt and equity positions, which, at this point, it's not a blanket real estate buy. We think there's select sectors and opportunities we like. In real estate, the student housing sector is especially interesting to us. In the Sun Belt, in what we call second-tier universities, we are seeing opportunities, in the debt space here as a lot of companies, and our clients are participating in this, have to refinance their real estate debt or their corporate debt. We've been long on private credit for a long time in the different subsectors of that. A large portion of our clients' allocation is in what we call defined outcome strategies. They're similar to structured notes that banks have issued for a long time. We like the ideas of them. We don't like the fees. We have a platform where we can use the liquid options market to put protection on liquid indices, individual names that are daily liquid. So from an alternative standpoint, and it's relevant to your point, the rotation that we see today, it is very advantageous for us to build these structures with downside protection very efficiently for our clients, which to your point is everyone says long-term, 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 but there is the short-term that does matter.
Yeah.
I am guilty of this, and it's not bad advice with it. We've all seen market distress periods where in the wealth management space, a client has been working with their advisor and they've said the words, hey, stay the course. It's the right course of action. That's not bad advice. However, when anyone says that, there's typically opportunities right around you that you should be picking up. So we use those defined outcome platforms and structures to give our clients the luxury of options to be in the right mindset to pick up those opportunities when those dislocations do occur.
No, it's a good point, right? There's certain things that happen, certainly pockets within a longer term cycle that can be opportunistic. Walker, thank you so much. Walker Williams, Chief Market Strategist at Lido Advisors, $20 billion in assets under management. As we said, they are a wealth advisory firm. So yeah, what? I know you're just like, can I go to Val?
Yeah, that sounds good. Yeah, I'll be a market strategist there.
I bet you would. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.